Welcome back to Squawk on the Street. As our viewers know, we typically do follow mergers and acquisitions here when there is an announcement of a significant deal. But in the current period, it has been much more of a focus on deals that perhaps are in jeopardy and those that actually have fallen apart either by mutual agreement or by one side trying to get out of a contract. We can add now Tiffany at least to the list of those deals that are concerning for those investors who are hoping that they are going to happen. You can see where the shares are headed right now. The question is whether or not LVMH will follow through on that deal. One of the largest of last year, November 25th, it was when it was announced, $135 a share, all cash, of course. A huge deal for Bernard Arnault and LVMH to acquire Tiffany, and part of their strategy to battle the likes of Richemont and companies such as that. Yesterday, Women's Wear Daily reported on a board meeting of LVMH in which there was at least uncertainty raised about the potential of the transaction. The article also citing debt covenants at Tiffany and obviously the disruptions to its business. The contract is a pretty tight one. The contracts in a lot of these deals seem to be fairly tight, and those would tell you that it would take some gymnastics perhaps to get out of it, though never seemingly impossible. What I can tell you from my perspective is, having actually done work on this as well prior to that Women's Wear Daily story, is that advisors on either side don't seem to be aware of anything at this point. What it may be coming from is the LVMH board and Bernard Arnault. Tiffany has heard nothing from LVMH in regard to either any problems with the deal and or desire perhaps for a price cut in the transaction. They have heard nothing at this point. Does it mean that there won't be? Does it mean that there is not a desire on the part of Mr. Arnault perhaps to see if he can wrangle a lower price for this asset? Don't forget, LVMH stopped paying some of its some rent to its landlords. This is a company that certainly was in a position to have done so. And as one person said to me, Bernard Arnault didn't get to be the richest man in Europe, Jim, by being a kind and gentle soul. We'll see. Right now, they're working through the antitrust. They are moving at the typical pace. Things are a bit slower as a result of everybody working from home, including the regulators. They do have an August 24th drop-dead date, but it can be unilaterally pushed out by 3 months by either side if all that is pending is antitrust approvals. We'll have to wait and see, Jim. You know, the other question is, does Bernard Arnault really want to end up in the Delaware Chancery Court if he wants to truly try to get out of this deal? Or is this really perhaps just a trial balloon to see if they can get a lower price?
But, David, aren't there strict debt covenants that Tiffany would be in violation if things don't get better?
Yeah, although they're not that. I mean, they have a 3.5 times leverage ratio, I think, that they've committed to being at or below. They're not, you know, they're bumping up against it, or I shouldn't say that. They're below it right now. Yeah, business is bad. I mean, there's no doubt. Business is bad, Jim, and that, of course, is a key consideration here. But is this really an asset that Bernard Arnault wants to let get away? Because if, in fact, they do try to say, see you later, they're going to end up in court, and they're never going to be able to buy it, most likely.
I'm with you. I mean, Restoration Hardware RH has a great note out, which just says, look, the one area that's holding up is luxury. Why walk away from uber luxury?